Hello and welcome. My name is Adrena. I'm the owner and accountant here at Accounting by Adrena. And in today's video, I am going to teach you how to read your financial statements. So I start off looking at your profit and loss statement. I look at your balance sheet, and I also look at the profit and loss statement by month. And I walk through and I talk through all of it. So stick with me if you have questions on how do you even read a financial statement? Where do you even start? What does it all mean? How can I figure these things out? If any of those questions resonate with you, this video is for you. And did you know that I have a weekly newsletter that I send out every Wednesday? If not, go ahead and subscribe to my newsletter using the link down in the description box below. As always, if you have any questions, feel free to comment down below, and let's jump right into it. All right, we're going to be using the sample company as we always do. So QuickBooks named it Craig's Design and Landscaping Services. I've already downloaded 3 reports, and if you haven't seen how to download reports or what reports that I love, I'm going to go ahead and leave a link to that video down in the description box below. And I'm just going to go through these reports, kind of like what I think are probably the most important things for you to look out for. Now, the first one is actually called the management report. And what I like to do is print this out on a monthly basis. This is basically going to show you all of your financial information consolidated for the whatever time period it is. So this says for the period ended March 31st, 2023, which means it'll include January, February, and March. So whatever period is open. Now, the first report that pops up is called the profit and loss statement. Now, this is going to show you kind of like the activity that is happening within your business. So this is the day-to-day stuff. Now, think of your reports as telling a story. So this story is what is the income that you've earned from January through March of 2023. Now, for design income, you've earned a total of $2,250. You gave $89.50 out in discounts, and you also had landscaping services of $1,287.50. So there are, it looks like, job materials that are related to landscaping services. That's kind of how I read this. And so these are part of, this landscaping services. You can kind of create accounts to have this type of structure there. So your total job materials, which is just these 3 accounts here, is $4,605.22. One thing I did want to mention is sometimes this account in QuickBooks is an expense account. So if there's 2 different types here in Craig's Design and Landscaping. So he does have an income account that says, it's for other primary income that says job materials. And then he has these 2 expense accounts here that also say job expenses and then job materials for supplies and materials. So it's just be really careful when you're looking at coding these types of transactions that you're selecting the correct account, because it can be really easy to make a mistake here. So I just wanted to kind of sidebar on that one just for a minute. Now, if we move down, there's labor, installation, maintenance, and repair for a total of $300. Now it says total landscaping services for $6,192. So this includes this $300, this $4,605, and then this $1,287.50. So it's kind of like a subtotal, if you will. Additionally, there are other income type accounts here. So there's pest control, and then maybe there's other products that he does sell as well. And then there's additional services. So this can be anywhere in between, maybe consulting on someone for their landscaping or whatever else is the case. So total income says $9,809.52. Now there is a cost of goods sold. So we reduce income from the cost of goods sold account. So that's $405. Now, if you go to the chart of accounts and you take a look at the cost of goods sold, you'll be able to see what transactions roll up into that $405. So there's a fountain, there's pump, sprinkler. So he purchased these and then turned around and sold them. As you can see, the income is up here to his clients. So income is normally reduced by the cost of goods sold for a total gross profit of $9,404.52. The next section after income is your expenses. So I'm just scrolling down to see those. And this kind of goes like alphabetical order. And then if there's accounts that have sub-accounts, then it's kind of like trickled down that way. QuickBooks does have some sort of structure embedded within their chart of accounts. And sometimes we cannot change kind of like how it flows. I think some organizations, some larger organizations that have the capacity and the capability of changing their chart of accounts, they probably would, change it around to have like maybe categories like administration or their programming or whatever the case may be. All right. So again, this is consolidated for 3 months. So this is total what they've spent so far on advertising, their automobile, and then they have fuel as a sub-account of automobile. Generally speaking, I think when you're looking at QuickBooks Online, it says gas and fuel. So I think that's the default account in QBO. There's equipment rental, insurance, and then we have that job expenses with job materials under it. And then there's decks and patios, plants and soils. So these are just what he spent a total of for those 3 months on job materials. And there's the subtotal there. And then job expenses is $891.99. Now we move on to the category for legal and professional fees. And there's probably just a small fee there for whatever legal fees that came through. Accounting is usually broken out. Bookkeeper is sometimes broken out as well. And lawyer is oftentimes broken out. Generally speaking, these are accounts that are used for processing 1099 NECs at the year end. So it's always nice to see it broken out. So that way you can quickly identify who you need to send out these 1099s to. So there's the total subtotal for legal and professional fees. Maintenance and repair. He did have some maintenance and repair during that time period for $185 and equipment repair for $755. And then he had some small expenses for meals and entertainment and then just office expenses. So that looks pretty normal to me. It's not usual that he would have a lot of office expenses as he is a landscaper. So most of his expenses are related to his business when he does the landscaping. There's rent or lease. Obviously, he needs somewhere to put all of these large pieces of equipment. So that makes a lot of sense. And then, of course, there's utility cost for that rent or lease space. So total expenses comes to $4,778.46. And that's just totaling all of the line item expenses that we just went through. And when it comes down to there is another subcategory for other expenses miscellaneous of $2,916. Now, this is very, very peculiar to me because when I'm looking at a financial statement and I see that large of a chunk, about $3,000, when his total expenses are $4,000, less than $5,000, this is a pretty large chunk. So I would actually drill down into this to see what it actually is and to see if it needs to be coded to a different category, because we really don't want to be coding things to a miscellaneous category. So I'm going to go here back to the chart of accounts and take a look at the miscellaneous account. I'm going to run the report and let's see. Okay, so there is a $2,000 charge that's pretty large for insurance agency. So this probably needs to be coded to insurance. So this is where I would sit with my client and make sure that they know that we need to reclass this to insurance. And he does have an insurance account up here that we did talk about. So maybe it is a specific type of insurance. And so if that is the case, then you can actually make a subcategory for whatever type workers' comp or whatever type of insurance it is. So that would be my one recommendation if I was talking to this person as my client. There's Tim Phillip Masonry and then Hicks Hardware. So Hicks Hardware looks like it probably should be going either to job materials or up here to cost of goods sold. And then this one here, Tim Phillip Masonry, I would move that to like a contractor expense if he is helping him with some sort of design or something like that in his business. So yeah, we if we were doing this, we would get rid of this whole account and we would distribute it to the correct categories. Either way, when all is said and done, you take the total income, the total gross profit of $9,404.52, and then your expenses, which is this. So let's bring our nifty calculator over. 4,778.46 plus 2,916. So total expenses is 7,694.46. The one thing that I don't like about these reports is that they don't give you a total expense that includes some of these other subcategories. And so when I am working on reports for my clients, I actually build that into my own report because I don't know why they wouldn't just automatically add that to the reports. So either way, 7,694, and let's see, gross profit is 9,404.52. So this is your net income, 1710.06, and there it is, net income. So that's basically income less expense. The next report you see here is the balance sheet. Now, I did download it as an Excel file as well. So I wanted to give you the opportunity to see what that looks like when it is downloaded into Excel, but it's basically the same information if we were just to look at the total liabilities and equities. It's 24,359.79. So this is the same information. It's just one is in Excel and the other one is in a PDF format. So the balance sheet really is just kind of like the opposite side of the transactions. So when we think of income and expenses, we're thinking of like categorizing each of these transactions. Now, the opposite of that is like, which bank account did it go to? Which bank account did it come out of? Are you using a credit card to pay for things? Or is it on, like for this one here, accounts receivable? So it looks like he sends out invoices to his clients and then he just kind of like waits for them to pay him back. So it doesn't look like there's any kind of upfront fee that he is collecting. He also has some inventory assets. So some of these items that he purchased, like I would say, sprinklers or drip systems, maybe he purchased a whole bunch of them and then hasn't sold them yet. So he has a little bit of a back stock, if you will, for potential clients in the future that he can use some of those items for. And the other thing that I would actually guide you to review is your undeposited funds account. Now, this could happen because, like, for example, if you are using Stripe to collect payments, this is kind of like a wash account. So Stripe would collect the payment and then hold it into this holding account called undeposited funds. And then when it's released into your bank account, then this would be reduced. So this is something that you would definitely need to look into. Again, you can look at the report from the chart of accounts as well. So if we just type in undeposited funds, we can see what exactly is happening. Okay, so these are the invoices that he's sending out and then checks that are coming in. So that's the holding account that he has there. And then it looks like he bought a truck for his business. And so that's the original cost of the truck. It's sitting right now in his fixed assets, which is great. And then at the end of the month, as of March 31st, he had $2,124.50 in his checking account, and he had $800 in his savings account. So that's how you read that top part of the balance sheet. So this is all your assets. So this is current assets, which means it's just liquid cash, other current assets like inventory and that undeposited funds account, and then your fixed assets, of course. Now, the bottom section is your liabilities and equities. Now, under liabilities, this is kind of like the accounts payable account is what you owe. So at the end of March, he had invoices entered into QuickBooks, but he has yet to pay them as of the end of March. So maybe he cut the check on April 1st. We don't know. He also had a balance on his credit card account of $922.37. It looks like he is making payments to the Board of Equalization. So at the end of whatever time period, he will end up reducing this amount by however much he pays. So let's say he owed $250 at the end of March. So he cut a check for $250 in April. So then he would still have a little bit left for the following payment. So I think it just depends if it was a quarterly, monthly, whatever kind of payment it is. It also looks like he had taken out a loan. So he has a loan payable account here for $4,000. So I'd be interested to see, what his plan is on paying that loan down. And then he also had a note payable for $25,000. Now, I don't know what I'd have to look at the loan documents in order to see kind of like what his plan is for those, but that is what he has sitting on the books there. And so, so this is your liability section. These are just kind of like the retained earnings account for your equity. Generally speaking, we like to zero out the opening balance equity to retained earnings. And then this number here, the net income, will match to your net income up here. So that's always something to look for. Make sure that you're double checking that as well. And at the end of the day, the total liabilities and equity should equal the total assets, and they do. So that is how you know that your books are balanced. Now, the last part I did talk about in my favorite reports video is this profit and loss statement by month. And so this is one of my favorite ways to look at a profit and loss statement, because although it's good to look at it on a consolidated basis as we just ran through right now, it's also good to look at kind of like how it flowed through the previous 3 months. So what we can tell here, so this is the total column, and I always kind of like to give it a shade of color so that way it's easier on my eyes to read the financial statements this way. And then I also do like to give it a little bit of a border here. Okay, so when we're looking at it month by month, then you can kind of see like, if you even just highlight these numbers, you'll get the average by month. So when looking at it in this perspective, it looks like he was the busiest in March. So that is something that I do try to pay attention to when I'm working with my clients. I like to look at, okay, which month is the highest in income? Because that tells me that's when they were really busy. And that's when they were hustling and getting all the work done. And even still, all of these numbers mostly are populated in March. So that is a very telling thing that's helpful for the story that we're talking about, right? For his design and landscaping services. And maybe that just means he's in an area where there is a lot of rain in January and February, and he doesn't get a lot of business during those months. But then when it stops raining in March, then he has an uptick in business. And so I think every business has its own seasonality with it. So, like for me, I always feel like the first 4 months of any given year are like the busiest. And then it kind of tapers off mid-year, and then it kind of picks back up again in the fall. So that's kind of like how I like to look at it when it comes to looking at the profit and loss by month. All right, well, that's all I have for you guys today. I hope this video was helpful. Let me know if you have any questions down in the comments box below, and I will see you all in my next video.